Welcome to Monday's Market Outlook here at Wealth Creation Investing. Matthew Buckley, the Chief Investment Strategist here at WCI, and we have a huge week ahead in the market, folks. We have everything from a two-day Fed meeting to a meeting of the ECB, the European Central Bank, and their Bernanke. His name's Mario Draghi. We have earnings this week. We have jobs numbers. A ginormous week of economic data, which means a lot of volatility in the market. We saw pending home sales come in better than expected today. Tuesday, on the flight schedule, we have more housing with the S&P Case-Shiller 20-City Composite Index, and then big report on Tuesday, the Conference Board's consumer confidence number. How are the consumers feeling about their current economic status? Then on Wednesday, we'll get some ADP non-farm payroll. Yawn. ADP numbers kind of take in the BLS, the Bureau of Labor Statistics numbers that come out on Friday. So the ADP is kind of a private number and really doesn't do anything to the market except Thursday is adjustment day, meaning based on the ADP numbers, Goldman Sachs, Morgan Stanley, just about every analyst revises either up or down their forecast for the actual formal non-farm payroll numbers on Friday. But the biggest news on Wednesday, in my opinion, advanced GDP. That is going to be potentially market moving. Why? Well, the GDP comes out in three separate stages: advanced, preliminary, and final. I really think that this advanced one is going to be crucial here. We also get Chicago PMI, but just as important, the FOMC statement after their two-day meeting. Here's a guess: the federal funds rate is going to stay unchanged. But the FOMC statement, obviously the market and the algorithms and everything's going to be picking apart every single word out of this FOMC statement. I think it's going to be the same as before. It's going to be one sentence with a however, but, or a comma. The Fed remains X, Y, and Z, however, comma, ABC. Same thing. The market's going to flop around like a fish out of water and then really kind of melt higher as we continue our $85 billion a month until really the Bernanke fires his shotgun in the air and says last call. So we'll see some volatility around the Fed statement. I don't think anything shocking is going to come out of that. Weekly unemployment claims on Thursday. We're going to get some PMIs, final manufacturing and ISM. Also construction spending, kind of a big number there. And then total vehicle sales, another indicator into the health of our economy. And then Friday, very big day with the non-farm payroll and the unemployment rate. Why is this critical? Well, the Fed says they're going to hang around until unemployment gets down to about 6.5%. But since we're smart, we're WCI and Top Gun options traders, we know that if the unemployment rate goes down to 6.5% on bad news, meaning, well, the unemployment rate's going down because more people are leaving the workforce or more people are on food stamps or on disability, that's a bad thing, and the Fed might have to hang around. Also, we get some inflation numbers. We get average hourly earnings and personal spending, personal income, and factory orders. So, as you can tell, folks, this is just an absolute huge week as far as economic data. But remember, I believe that we're still in bizarro market. I think that bad news is actually good news, and the Fed has to hang around. But as we've talked about, the Bernanke is a lame duck. Right? His term's over, and now, there's a horse race between who is going to take over for the Fed chief. But I think before his change of command, he is going to at least start to ease off the accelerator because he doesn't want to go down in the history books as kind of the bartender that kept the bar open 24/7 and caused a bunch of car crashes and DUIs as a result of his policy. So I think he's at least going to fire that shotgun into the air, and that's probably going to come into the fall. Okay, so like I said, a lot of stuff going on this week. Had a great weekly options live trading session this morning. We have two positions that are already up nearly $1,000. We're looking at nearly $1,000 in gains over at Top Gun Options in our weekly options model portfolio. We have a Google put spread on. that we put on Friday, and then a bullish or a bull put spread on the GLD, which is starting to catch a bit of late. Hedge funds have tripled their investments recently in the GLD and the physical stuff, and it's really, I think it survived its near-death experience, and especially with all the economic data out this week, we put on a nice 126, 124 bull put spread in the weekly options model portfolio. Just a quick heads up that as of shooting this, we might be close to having filled all of our full throttle spots over at Top Gun Options. So if you're interested in getting on board our full throttle program, I think you probably need to give us a call ASAP at our Wealth Creation 888 number, okay? Because I'm almost certain that we filled everything up, but if we didn't and you want to get on the wait list and get in here, I strongly recommend you do it. Hell of a deal. And as we saw last week, we saw nearly $3,000 in weekly options model portfolio gains, and we're seeing another $1,000 today. That's nearly $4,000 in profits in a week and a day, which would have already paid for the year of the full throttle program potentially. So get on board right now if you're interested in the full throttle program. Like I said, give us a call at our 800 number at Wealth Creation Investments, and that number is 888. So it's 888-398-9996. Okay? Again, 888-398-9996. And you can talk to one of our reps, and hopefully they can find a spot for you in our full throttle program. All right, guys, I got to run. Very busy week ahead. I'm getting ready for our primary live trade brief tomorrow morning at 0900. But like I said, going to see a lot of volatility this week. And even with the market, down 70 and the SPOOs off 10, I mean, look at the VIX. The VIX is up nearly 9%. And we put a bullish double vertical on volatility in the primary live trade brief model portfolio. That's up $1,500 today on the spike in the VIX. Every time the VIX gets near its resting heart rate, which has been 12 recently, we see a nice pop in volatility, and we've been putting this trade on consistently. I mean, look at this right here, folks. Every time the VIX hits about a 12, we get a freak out. Freak out, freak out, freak out. Longer freak out going into the Fed meeting, and then we're potentially going to see a freak out here as well. So very nice trade on the VIX over in our primary live trade brief model portfolio. All right, guys, got to run. Happy hunting. Make sure you hedge, and I'll be back tomorrow over at Top Gun Options with our sit rep, and you can check that out right on the homepage at topgunoptions.com. We'll see you.